Hi, you're listening to Kopi Time, a podcast series on markets and economies from DBS Group Research. I'm Taimur Beg, Chief Economist. Welcome to our 56th episode. Today, we will delve into an issue very close to my heart. See, I come from a family of strong women, all professionally accomplished and dedicated to doing good. I know firsthand how women's inclusion in the workforce and their financial autonomy can elevate a family or even a society. So let's talk about this issue with a foremost expert in this field. Ellen Iskenderian is our guest. She's the president and CEO of Women's World Banking, a nonprofit organization devoted to giving low-income women in the developing world access to financial tools and resources they need to achieve security and prosperity. Ellen has been with Women's World Banking for 15 years and leads the firm's global team based in New York. And she also serves as a member of the investment committee of its two impact investment funds. Prior to Women's World Banking, Ellen worked for 17 years at the IFC, or the International Finance Corporation, which is the private sector arm of the World Bank. She's a permanent member of the Council on Foreign Relations, as well as a member of the Women's Forum of New York and the UN Business and Sustainable Development Commission. Ellen, a warm welcome to Kopi Time.
Hi, Taimur. It's so great to see you. Thanks for having me.
It's our pleasure. Let's start with the issue of gender equity. Where do we stand? And can you share with us some data from the industrial and emerging world that help us appreciate the gender gaps that exist right now?
Sure. So when we talk specifically around issues of financial inclusion, the gender gap globally is 7%. So there are 7% more men with an account in their own name than women. In the developing markets, that's 9%. Now, you're probably thinking, wow, I thought things were a lot worse. That's not so bad. Some of it really has to do with the way that financial inclusion is measured. So all that number tells you is how many people actually have an account in their own name. It doesn't say anything about usage. It doesn't say anything about other services that are offered through that account. And it really doesn't tell you very much about probably the single biggest factor in financial inclusion today, which is digital financial services. So if we start to unpack those numbers a little bit, we see a much bigger gap when we start looking at cell phone ownership, for example. So the ownership of the feature phone, flip phone, that's also sort of roughly 10% globally. But since most of the banking approaches are really being designed for internet-enabled phones or smartphones, that's, again, really where you start to see the divide. 20% gender gap in globally in the emerging markets. In South Asia, those numbers start to creep up into a 30% gap. So 300 million fewer phones owned by women, mobile phones, smartphones owned by women than by men. And that's really the ticket to digital financial services and really the on-ramp to financial inclusion. So I guess just wrapping this up, the headline numbers really don't tell you a lot about what's really going on in the field today.
So you would include access to cell phone almost as important an aspect of financial inclusion as having a bank account.
Absolutely. And not, again, similarly to the bank account, not just access, but really an understanding of how to use it, a confidence to use it. Again, we see a real gap in men's and women's willingness to play around. Women will download WhatsApp quite easily on their phones, but then they get sort of stuck on that app and they don't tend not to, to explore the rest of the internet, the rest of the functionality of the phone, whereas men are much more willing to do that. And that's a factor, unfortunately, we see across the income spectrum for women.
Okay, so I'm, again, starting from very basic. So I would ask a question that might seem a bit naive, so forgive me for that, which is, why is women's financial inclusion at the heart of your organization? I mean, if you were keen on gender equity, couldn't you just advocate for legal reforms that ensure equality of access or opportunities across gender?
And it's such a great question. And maybe I can take a little step back and tell you a little bit about Women's World Banking and, where we come from. So we are 42 years old this year, and the organization really stemmed from, was incubated, if you will, at the first UN Conference on Human Rights for Women in 1976 in Mexico City. And a group of women who were there from different walks of life, different parts of the world, were listening to all of this human rights-based language and realized that if women didn't have equality of economic rights, and some of that is in absolutely the legal reforms that you alluded to, if they don't have economic equality, then that so many of those human rights really are denied them. And I think it's always important to remember that in 1976 in the United States, the country I'm from, a woman couldn't get a loan in her own name without her husband's signature. She couldn't have a credit card in her own name. There was no opportunity for her to say, no, my Social Security benefits go to someone other than my husband. There was a lot of constraint around women's financial equality, even in the developed world at the time. And so this movement grows. 1979, we're created. And the original intention really was this support to women entrepreneurs. If a woman entrepreneur was denied a loan, Women's World Banking would stand behind them as guarantor. That was the original identity or identifying mission. And indeed, we did a lot of those loan guarantees in the early years, but it was happening just as the global microfinance movement was really starting to explode. A lot of it born in your home country in Bangladesh, but we saw also very exciting trends in Bolivia and some of the other Latin American countries. And so those two movements kind of merged in Women's World Banking. And so we started in some ways as a membership organization and supporting microfinance institutions around the world that were really committed to women's financial inclusion as it was understood then, which was largely access to very small loans. And I'd say we sort of stayed in that mode of membership organization for 25 years or so. But this is where I think the story gets kind of exciting and loops back to your question. As technology slowly started to really emerge as the main way that we were going to be able to reach large numbers of excluded people, both men and women, the number of organizations and players and interested parties who really kind of wanted to get in on this game of reaching low-income people, not just with credit services, but with savings, with insurance, and very notably with payments, we started to see an explosion in terms of who Women's World Banking could and should be working with. So today we've moved far beyond those microfinance origins, and we work with 56 financial service providers in 31 countries. They serve a total of 69 million women, and they are all over the place. There are still some wonderful, iconic microfinance institutions, but we have about a third of our network members today are fintechs. There are 23 full-fledged commercial banks, some of them working across several markets, which is very exciting to be able to really reach women at scale. We have a payments bank, we have insurance companies. So the plethora of players now is really so exciting. And the ability to use women's access to finance to move the dial on so many other issues like safe water, food security, better health, better education, really makes financial inclusion such a great lever to drive change in so many other ways.
Okay, very exciting. And I'm going to unpack some of the stuff you talked about because, we need to get deeper into it. Okay, so firstly, all the initiatives you started saying that, in the 70s, starting from loan guarantees to then partnering with microfinance corporations, and now focus on the digital. So share with us a couple of specific key initiatives for 2020 and 2021 through the middle of this pandemic that has made you feel that, they're having a huge impact?
Well, the digital, this isn't an original issue with financial inclusion. Digital has become so critical and has really, I think there's been a moment, I'm tremendously optimistic, actually, that some of the things that we were able to achieve in terms of financial inclusion as a result of the pandemic, it's taken years for us to do what we've been able to do in a matter of months. So you saw really many governments and the regulators in those governments, not recklessly by any means, but take on a greater willingness to look at remote account opening or the movement of government benefits payments or relief payments onto a digital platform in order to take advantage of that contactless delivery, the need to be socially distant. In India alone, in the first two weeks of their announcement of COVID relief payments, back at the beginning of the pandemic, opened 25 million bank accounts in 2 weeks, mostly for women, and mostly because they were only one of 2 countries that made a dedicated effort to have their COVID relief payments payable only to women. And they were working off of decades now of research that looks at when you put that payment, a welfare payment or even a tax credit payment into the hands of a woman directly, more numbers of people in the family benefit. You see real impacts on better nutrition, better healthcare, more kids stay in school. So they really learned those lessons of making sure those payments can get into the hands of women.
It's interesting, Mariellen. I have heard from some people that the pandemic was particularly tough on women because if you have to stay at home, it's almost always the women's job to look after the kids who are doing school from home. And as a result, the labor force participation for women has sort of gone down both across developed and developing markets. So yes, on one hand, I fully agree with you that the acceleration in some of the digital reforms that were planned for over a multi-year horizon have gotten done in a fast-track manner. But when you sort of scan the horizon and you've been looking at a wide number of emerging market economies or developing economies, do you see the digital divide play out, or has it actually been counterintuitively not the case and women actually have been more included?
So the digital divide has, I think, is pretty much or the closing of that divide in the last year has, I think, been pretty much an unalloyed success. You've seen, much of our work in the last year has really been taking this tremendous opportunity of these COVID relief payments, increasingly digital, increasingly going to women, because you saw several countries, Indonesia in particular, and we've done quite a bit of work there. We can talk about that. Basically, on a dime, they pivoted their largest conditional cash transfer program, the PKH program, into a COVID relief payment. And that was already going to women, but they really looked for ways to have that program also drive women's financial inclusion. So I think that has been quite positive for women. Where we're still quite concerned is exactly on the issue you mentioned. The care burden has always and still does fall disproportionately hard on women. And so now, as economies are beginning to open back up again, you're seeing women really lagging in going back into the labor force until schools are open full time, until childcare is consistently available. So that sort of outside of the digital realm, that is still presenting, real problems with regard to inequality. Now, can digital also be a solution to that problem? We were already starting to see pre-pandemic a real movement to digital commerce and many women moving their businesses online and able to reach a much larger population with their products and services, and very exciting opportunities for that woman who might have that home-based business bring that online. So again, there might be a bit of a silver lining, but I don't think we should be celebrating quite yet on the impact, the disproportionately hard impact of the economic effects of the pandemic on women.
Right. We characterize 21 as a year of cross currents. So in a way, you just described yet another cross current, that there are certain silver linings, but then there are also certain challenges that we cannot just forget about. You partner a lot with governments and government organizations. So on this particular issue of the post-pandemic recovery, maybe asymmetric and more detrimental to women coming back to the labor force, are you seeing governments cognizant of this risk? And are you seeing them trying to ameliorate that risk?
Very much so. And I think, again, I don't think that quite rises to silver lining, but it certainly does appear to be a wake-up call. You've seen a much greater realization that, basically without childcare, without a consistent place and assuredness of access to childcare, so much economic opportunity just will continue to be denied women. And so you're starting to see policymakers building that into other relief. The other thing that we haven't talked about yet that is just literally at epidemic proportions in the last year is gender-based violence. And when, particularly during lockdown situations, you've seen violence against women just skyrocket. Unfortunately, you're seeing an increase in violence against young girls. I was talking to one of our partners in Kenya just last week, and she's saying this is the first time in decades that you've started to see creeping up numbers of child marriage. So young girls who may have been abused during lockdown, getting pregnant, and then being married at younger and younger ages, which is unfortunately a trend that we were starting to see turn around. And that too has been a wake-up call for governments. You've seen a couple of countries make larger allocations of COVID-related funding to domestic violence shelters, for example. So you've started to see a policy awareness of how the lockdown itself and then the economic impacts really hit women harder and differently. Maybe that was not the most felicitous turn of phrase to say hit women, but affect women harder and differently than they do men.
I'm really glad. Mariel, even as economists, we sort of write about scarring impact of crises. We wrote about it after the 08-09 crisis. There's certainly going to be some degree of scarring. But once one sort of, is not cognizant of these sort of, details about the impact on gender and inequality, one sort of misses out. It's not just about the impact on the financial sector or just bringing people back to work. It's a question of, which segment of the population is disproportionately affected. So I'm glad that you're seeing that sort of awareness and that feeding into policymaking. You briefly mentioned India and Indonesia earlier. And, I was a proud member of your Southeast Asian Council for a couple of years. So I want you to tell us a bit more about your involvement in Asian economies and tell us both through your partnership with governments, but also the entrepreneurs that you're supporting.
So as a proud member of our Southeast Asia Advisory Council, you know that we sort of entered the region in a very unusual way for us. We had a deep and we were very honored to be sort of embraced by the Indonesian government in the creation of their national financial inclusion strategy, which is not typically the way that we sort of move into a market, but it gave us just an incredible breadth of vision of what the issues were, what the gender issues might be that the government really had not even realized were gender issues. Indonesia has turned out to be just such an incredible incredible learning ground for us. It is a country that, we were talking at the start of the conversation about, you have to maybe double click on the data. Indonesia is a perfect example. If you look at their published financial inclusion data, you actually see a reverse gender gap. There are more women that have a bank account in their own name than men. But the usage is very, very much the other way. And I think that the depth of the financial depth for, particularly for low-income women is really quite problematic, something that the government is quite aware of. And that was why the work that we were doing with the PKH program, before the pandemic, it again turned out to be so felicitous and so well timed, because as they moved into COVID relief, so many of the issues that were coming up were gender related, and so we were very proud to be a close partner of several of the economic ministries, as well as the social affairs ministry. When they switched the PKH payment to COVID relief, they doubled the number of payments and increased the frequency. And you saw the most frequently asked question by women is, I'd like to save some of this money. I don't necessarily want to spend it all now, but I don't know how. How can I save it? They had no real understanding that the way they had been receiving this program, this payment, was in a bank account. So, very basic financial literacy we got down to very, very quickly, and explained, the ability to save within that account. And the fact that it was digital, we were able to do some fast digital education as well to give women the confidence to interact, particularly if they were going to leave savings in the account. Now, unfortunately, we also had a lot of questions about, let's see, if I'm going to save this money, do I have to tell my husband about it? And so that always, I think that's the most frequently second asked question when we're talking to women about savings. So just the opportunity of the G2P payment, the government to person payment for further financial inclusion, I'd say has been a real hallmark of the pandemic response from Women's World Banking.
Okay, and then I saw in Southeast Asia in particular, you also, facilitating, a fintech challenge and providing support to entrepreneurs in Cambodia, Vietnam, elsewhere. So give us a flavor to the listeners about all those things that you've been doing the last few years.
No, thanks for that prompt, because after that sort of initial entry into Southeast Asia with the work with the government, we've really gotten very excited about possibilities in the private sector as well. And as you mentioned, we've been working with a mobile provider, Wing, in Cambodia, both on their G2P. They were part of the government's relief payments distribution process. But then more recently, we took a solution actually that we had piloted in Bangladesh in terms of digitized wage payments from garment workers, and are now applying that for digitized salaries that factory workers in Cambodia also receive through Wing. And there, the real focus, and I'd say it's not just in Cambodia, but really goes across the region, is we were seeing 80% of those salary payments were cashed out within 4 hours of receipt on day one. And in Cambodia and much of Southeast Asia has really been very good about having so many things that can be paid digitally. And there's really no reason to pay your utility bills, pay your rent, pay so many of these very important household responsibilities in cash. If you can keep that those payments in the digital system. So it's been both a combination of identifying use cases that are relevant for women in particular, but also some financial education, some digital literacy around how to use that digital account so that you don't have to cash out. I think we're also very excited about maybe taking further afield a project we worked on in Indonesia. We found that midwives have traditionally almost been a sort of secret bank account or a banking source for pregnant women who save throughout their pregnancy for the large expense of the delivery and then the postpartum expenses. And so we thought, well, what about digitizing all of that? Because we saw not only did the midwives have mobile phones, but the majority of their patients did as well. So we've created a mobile wallet product for the midwives, but we also made the midwives agents, digital payments agents in their village. So that brings sort of another source of revenue for them. They're already a trusted, known quantity in the village. So they had a natural business advantage, also providing some financial education. So we're very excited about that possibility because that maternal healthcare relationship is so important for so many women around the world that we think there's a lot of that has a lot of legs, if you will.
I wanted to ask you a related question because I know that Women's World Banking does a lot of research on all these different initiatives that's taking place. Have you had any insights on what women do when they receive the digital payment? I mean, do they use it for the things that you just talked about, which is paying bills, or do they also end up spending more money on their children's health and education than they otherwise would have? Is there any finding like that?
Yes and no. I think it really depends on the circumstance in which they're receiving the payment. I think one thing that we have seen throughout the pandemic that was a pleasant surprise is we've seen savings balances increase across the board. And so there really does seem to be an understanding amongst low-income people receiving these government relief payments that they need to be creating a safety net. This may go on for a while. And so using those payments for immediate expenses is not the right policy. So we've been really pleasantly surprised to see savings increase, and that tends to be motivated by the woman. The putting money aside for that longer term need tends to be more motivated for a woman. When it's something like a conditional cash transfer that she's receiving a payment if she's keeping her child in school or taking her child for preventive healthcare checkups on a regular basis and then receiving a payment, we see that those payments, as I mentioned earlier, tend to go towards more nutritional foods. You definitely see a change in the quality of food that's consumed by more members of the family. You definitely see healthcare as a number one use of funds for women in the household. That just seems to be a social norm across the world that women are sort of responsible for the healthcare expenses of the family. You see and you see education. And again, it's more members of the family staying in school for longer periods of time, including girls.
So Mary Ellen, Women's World Banking has a long-standing, deep relationship in a number of African countries, as well as in Latin America. Through the last year and a half, have you seen your operations in Africa evolving differently than the ones that you just talked about in Asia, and same with Latin America, or they have been all the same, that people are responding to incentives and challenges similarly across the world?
It's a great question. I do think, that this focus on digital, the recognition that it's not only a great equalizer, but the speed, convenience, and the proximity of the mobile payment. There's a lot of research, very interesting research, that very strong correlation. And I know you economists are always very reluctant to ascribe correlation, but and causation. But we see very close correlation between financial inclusion and the proximity of financial outlets. And so with digital agents able to be much more prevalent than the traditional bricks and mortar bank, you're seeing financial inclusion rates increase, and much more so for women than for men. That convenience factor, that ability to bank from home, in your pocket, really plays a huge role in moving women's financial inclusion. And that's something really we've seen, across the board.
But Mary Ellen, the depth of the pandemic has clearly been, much more felt in Latin America. I have friends in Colombia and Brazil and Uruguay, and it's a whole different level of outbreak-related disruption to lives and livelihoods. So any views or any insights or experiences on how things are there vis-a-vis Asia, where admittedly the pandemic has not been that severe?
No, that's a great question. I have to say, I've been so impressed by the financial service providers that we've worked with throughout Latin America in the nimbleness of their response, the recognition of the unique issues that their clients are facing in this time. Pretty much, all of the countries that we're working in did put payment moratoria in place for any loans that these financial service providers might have had outstanding. And where I think the Latin American financial service providers were so fortunate is that there is a higher level of digitization. More women have access to mobile phones there than in some of the other places we've talked about. And that factor alone allowed these financial service providers to stay in touch with their client base. And so they had a much better idea coming out of the moratorium, who was going to be able to repay, who was going to be able to, who was going to need to restructure, but would ultimately get, back on their feet. We saw, you and I haven't talked yet about our impact investment work, and
I was going to come to that.
That is really where we've seen some real breakout opportunities. We just invested in a fintech in Colombia that sort of works on a model that has worked very well for women over the years, just where you have trusted members of the community doing initial credit screening, assessment of the household's ability to repay, and then bringing that information back to the fintech who uses a scoring algorithm. They have both men and women referrers, but it's been very interesting. Women are much less frequently referring than men, but the rate of a loan actually being dispersed and then that loan being repaid is much higher amongst the women referrals. And that ability to stay in touch with the client through these women referrers that are in the community has just allowed this fintech to really maintain a very high rate of repayment. They've just started an insurance payment that's been bundled with some of their loans in response to some of the healthcare related issues that have come up with the pandemic. So I'm a bit of a broken record here on the digital, but we've really seen some instances in Latin America where that has been that's been very helpful. In Mexico, we're seeing some of the banks being really responsive to small business entrepreneurs trying to move their businesses online and then facilitating online payments for them.
Okay, so I'm going to get to the investment fund in a second, but since you brought this out, I just thought of this issue, which is, so I live in Singapore and we have very large number of female domestic workers in Singapore who send back money to the Philippines or Burma or India, wherever they come from. You have similar presence in Hong Kong and increasingly so in other parts of Asia. So clearly, there is a huge amount of women migrant workers, formally employed. These are not informal workers, and they are sending money back home. So, to your point about digital and facilitation of these things, any interesting things that are happening on the digital space on remittances?
Oh, so glad you raised it. In fact, we've just in the last few months launched a remittance project in the Indonesia Singapore corridor with a fintech, in an Indonesian fintech, and looking at not just facilitating the payment itself, which is kind of the easy part in a way. There's some digital literacy involved at both the remitter and the recipient end, but really, how do we make sure that remittance can be an on-ramp or a driver of broader inclusion, and trying to understand the broader set of needs on the part of both the senders and the receivers. We have seen some, really interesting research that senders have very strong views about how they want their money spent when it's received. They obviously, particularly during this pandemic time, have wanted, for whatever consumption needs are required, but the vastly most desired outcome for some portion of the funding are healthcare and education. And so we're looking at, is there a way to segregate payments? There's some data, some interesting behavioral economics data that shows even if you just label the payment, the remittance, for education, there's a higher likelihood that at least a portion of the remittance will be used for that purpose. So we're using a lot of behavioral techniques, a lot of design techniques. How do we make sure that payment is achieving the most in terms of both financial inclusion and the goals that both the sender and the recipient are looking to achieve?
All right, so these are innovative activities, and clearly, fintechs are doing it because they can make money out of it. And if they can make money out of it while doing good, Women's World Banking can then start offering impact opportunities. So, Marilyn, you sit on two of the impact investment funds at WWB. Tell us about those funds and what they do and how they have been doing.
So this has been, I think, one of my proudest achievements in my time at Women's World Banking, is moving us from being I think a trusted researcher, a trusted advisor. There's a lot of work that have been trusted within our partners to help them move the needle, both in terms of outreach to women clients, but greater gender diversity amongst their leadership and board, but the ability to really drive change as a shareholder and as a member of a board of directors really has outpaced anything we were ever able to see as an advisor. So I'm very excited. Our first fund was a $50 million fund. We made 10 investments across the globe. Most of them were in more traditional microfinance institutions, although we had a couple of interesting outliers, an SME lender in Jordan, for example. All of them just got really hard hit with moratoriums and liquidity issues and all sorts of issues that came up with the pandemic. I am thrilled that so many of them had, as I've been saying, really good digital connections to their clients, were able to stay on top of clients. We started to see, as early as, early last summer, repayment rates starting to tick up, even under moratorium, because the population they were serving were so intent on maintaining that line of credit, maintaining that ability to borrow as their businesses came out of the pandemic. So while we had a pretty significant write-down evaluation right at that first quarter when the pandemic came on board, we've been able to improve our evaluation steadily. We've had a couple of very strong exits of that first fund portfolio. To my amazement, we were able to have a first closing of $75 million within 3 weeks of the New York lockdown, which I'm not sure in retrospect I would have written a check during those first few weeks, but we were just very, very grateful to our LPs for having that faith in us as we were raising money over the immediate pre-pandemic period. We've made 4 investments during this period since last March. Really interesting companies. 3 of them are fintechs. The 4th is an affordable housing lender in India that makes it a requirement that the woman's name be on the title to the property that they are financing against, because that asset ownership relationship to empowerment is so strong. Our most recent investment, and actually the largest investment we've made to date, was in a P2P micro lender in Indonesia, a Martha, and we're really excited about the opportunity there. They've performed extraordinarily well throughout the pandemic, and we're very excited about working with them on building out the platform and other products that they might be able to offer on that platform. We are still in capital raising mode, so I can't say too much more to your podcast audience, but we think this is a really exciting time to have capital for particularly for digital financial service opportunities and for an ability to support women as they come out of the pandemic.
Okay, so sounds like it's gone very, very well, and I'm really glad it has. But the life of somebody who raises money from skeptical investors cannot be that easy. So share with us the skeptical questions that you get, and tell us the responses that you make that clinches the deal for you.
Well, there's this really frustrating. I'm so glad you asked this, Tamer. There's this very frustrating sort of false equivalency, I think, in a lot of investors' minds. That I think first, when you say impact, there is somehow an assumption, whether it's stated or not, that means, oh, I have to give up a little bit of return. And then when you say women, somehow that's, oh, I'm going to have to give up even more return. So I think really one of the first hurdles that we have to get over, really with everybody, whether it's, development finance institutions, even people who are mission focused, to say at the heart of our business proposition is that a financial institution that is committed to serving women is actually a very profitable growth strategy, and that's the strategy we're investing in. And what's been really gratifying is that we've seen in our portfolio that the institutions that have more than 50% women clients have had fully 600 basis points improved ROE throughout the life of our the holding period of our investments. We've seen during the holding period amongst our portfolio companies, we've seen an 82% increase in women clients. So we're very proud that we've really been able to make that case to our portfolio companies, but then really being able to show that almost overweighting of women clients shows up in better returns. And that's the question that the investors we really have to address.
Fantastic. Now, these sort of ground level insights are not only useful cases for convincing a skeptical investor, but I would think that these will also benefit companies that are considering gender equity within their ranks. And so my understanding is that Women's World Banking also does work with companies to provide them with tools and programs to build gender diverse teams. So we haven't really talked about that. Would you share with us, what kind of stuff you do?
That's really such a fundamental part of the whole picture, that we see that institutions that have diverse teams, and particularly gender diverse teams, do have outsized financial performance. So Women's World Banking has been offering some variation of leadership training that really drives women's leadership inside both financial service providers, and then more recently inside financial regulators, pretty much throughout our history. There's a sort of model that we've stumbled on in the last 8 years or so that works particularly well, where you pair a senior executive, or in the case of the regulators, a senior regulator that's more or less at the deputy governor level of a central bank, with a high potential woman. And they both go through training separately and together. On the financial service provider side, our academic partner is the Wharton School. On the regulatory side, we're partnering with Oxford University. So there's really world-class, world caliber leadership and management training. And then we're providing that sort of extra sauce of why does diversity matter? What does diversity in a policy actually look like? So many policymakers just assume policy is gender blind, when nothing could be further from the truth. And once their eyes have been opened to this, it can really change minds. So that making sure that there's a group of both men and women in an organization that understand the value of diversity and understand how policies and products impact women differently is a very important part of the way we drive impact.
That's great. Okay, finally, a little bit of crystal ball gazing. You've been working at this space for the last couple of decades. So seeing the progress that's been made, where do you see the state of women's financial inclusion in the year 2040?
2040. Oh, all right. I've got almost 20 years. I do think that we will easily be at parity on the measurements that I mentioned before. And my crystal ball is that the technology gap will also close, and maybe women may even exceed, because the technology benefits like convenience, confidentiality, security, when women get it, they adopt at much, much faster rates than men. So I'm going to go so far as to say we will have a bit of reverse gender gap, and my successor will come on your successor's podcast and talk about how we can work on men's financial inclusion.
We'll definitely look forward to that. Ellen Iskenderian, thank you so much for being on our show today.
Great. Thank you so much for having me, Timer, and please stay safe.
Absolutely. Thanks to our listeners too. Kopi Time was produced by Martin Tuckey, Daisy Sharma, and Violet Lee provided additional assistance. It is for information only and does not represent any trade recommendations. All 56 episodes of Kopi Time are available on YouTube and on all major podcast platforms, including Apple, Google, and Spotify. As for our research publications, webinars, and live streams, you can find them all by Googling DBS Research Library. Have a great day.